Today we are staring directly into the face of a market setup that completely defies all logic and exposes exactly what is happening behind the curtain with AMC stock. If you are looking at your screen and seeing the red, seeing the fear, and wondering what is going on, you need to stop and listen right now, because the data we have uncovered today is absolutely screaming manipulation in a way we have rarely seen before. We are looking at a scenario where the math simply does not add up unless there is massive interference happening in the background. How on earth does a stock trade 55 million shares in a single trading session, which is an absolutely massive amount of volume indicating incredible interest and turnover, and yet the price drops by 4%? In a free and fair market, that level of volume usually equates to massive price discovery and volatility to the upside, but here we are seeing the exact opposite. The answer to this mystery is not that retail is selling, and the answer is not that people are abandoning the play. The answer lies entirely in where those trades are being executed and hidden from the public eye. We have the absolute proof right here in the charts and the exchange data that shows the system is being rigged in real time to suppress the price action. You need to understand that when 55 million shares change hands and the price goes down, it means that the buying pressure, which we know is there, is being completely absorbed and routed away from the lit markets, where it would actually impact the price. This is not just a bad trading day. This is a calculated, mathematical impossibility that serves as the ultimate smoking gun that they are terrified of this price running. We are going to break down every single number, every single percentage, and every single data point that proves without a shadow of a doubt that they are losing control and are forced to use extreme measures just to keep AMC at $1.40. We need to dive deep into the smoking gun because the official numbers from Thursday, February 5th, 2026, paint a picture of undeniable market abuse that should have every single regulator paying attention. When we look at the closing price of $1.40, which is down 4.42% on the day, it looks bearish on the surface. But when you peel back the layers, you see the crime in broad daylight. The total volume was 55,155,194 shares. Now, here's the statistic that exposes the entire game. The off-exchange and dark pool volume for the day was a staggering 81.66%. Let that number sink in for a second. 81.66% of the entire volume for the day was completely removed from the public exchanges. That translates to over 45 million shares that were rerouted away from the lit exchange. When you look at the lit volume, specifically for the New York Stock Exchange, only 6.12% of the trades actually happened there. This is absolutely insane. The 30-day average for dark pool volume is already high at 73%, but today they had to ramp that up to 82%. Why would they need to increase the suppression by nearly 10% in a single day? The answer is simple. The buying pressure was likely insanely high, and if they had allowed those 45 million shares to hit the lit market, the price would not be sitting at $1.40. It would be absolutely flying to the upside. This high volume on a down day is the classic signature of institutional absorption, meaning someone is buying every single share that retail is panicking over, but they are doing it in the dark to keep the price flat and demoralize you. They are hiding the buy orders to paint a false narrative of weakness when the reality is they are accumulating massive amounts of stock. If you are sitting there thinking that this is just normal market mechanics or just how the stock market works, you need to think again, because we have the proof that AMC is being specifically targeted compared to every other stock in the basket. We looked at the other basket stocks for today to see if this was a market-wide trend, and the results are shocking. Look at GameStop, which was down 1.2% today. The dark pool percentage for GameStop was only 47.13%. That means they allowed over 50% of GameStop trades to actually hit the lit exchanges and contribute to price discovery. Now look at Hycroft Mining, which was down 14% today, largely due to the drop in silver prices. Even with that massive crash in price, the dark pool percentage was only 50.11%. The trading there was fair and balanced between lit and dark markets. The conclusion here is undeniable. AMC is the absolute outlier. It is the only stock in the entire basket that is being suppressed with over 80% dark pool volume. This proves that AMC is the battleground they are most afraid of losing control over. Why is AMC at 82% while the others are hovering around 50%? because AMC is the one that poses the biggest systemic risk to their short positions right now. They can afford to let the others trade somewhat normally, but they cannot afford to let AMC breathe for even a single second. This comparative data destroys the argument that this is just a red day for the market. This is a targeted, specific, and desperate attack on AMC because they know that if they let the pressure off the lid, this thing explodes. We have to look at the macro context because this is the perfect storm for a squeeze, and they are using the broader market fear to hide their suppression tactics. The volatility index, or VIX, absolutely exploded today, up over 16% to close at 21.77. The fear and greed index has dropped all the way down to 33, signaling extreme fear in the marketplace. But you need to understand the upside possibility here. When the VIX spikes this hard, margin calls start to happen. Hedge funds lose the value of their collateral, and they get squeezed from all sides. They are pushing the price of AMC down to $1.40, not because the company is failing, but because they desperately need the liquidity to survive the margin requirements that are hitting them from the broader market crash. Historically speaking, these massive bottoms in the fear index are exactly where the biggest reversals start. They threw 82% of the volume into the dark to drop us just 7 pennies. That shows absolute weakness, not strength. 55 million in volume shows high interest. 82% dark pool shows high suppression. And a $1.40 price point represents a massive accumulation zone before the spring uncoils. If they had nothing to hide, the trade volume would be on the NYSE, plain and simple. The data does not lie. Stay strong, because everything we are seeing in the charts, from the dark pool abuse to the volatility spike, tells us that we are right at the tipping point of something massive. Based on the data presented for Thursday, February 5th, 2026, the trading activity for AMC exhibits clear signs of artificial price suppression rather than organic market sentiment. In my opinion, the most damning evidence is the disconnect between the massive 55 million share volume and the staggering 81.66% off-exchange dark pool usage. It is highly irregular for a stock to see such immense turnover result in a 4% drop unless the majority of buy orders were deliberately rerouted away from lit exchanges to prevent upward price discovery. When you compare this to GME's 47% and HYMC's 50% dark pool rates on the same day, AMC stands out as a statistical anomaly, indicating it is being uniquely targeted. With the VIX spiking 16% and the fear index hitting 33, it appears institutions are utilizing the broader market panic as cover to absorb liquidity at $1.40. If they required 82% dark pool volume just to suppress the price by 7 pennies, it suggests the stock is in a high-tension accumulation zone, effectively coiling for a potential violent move to the upside once that suppression breaks.